You know, when I first saw the headlines that a Morgan Stanley executive think Bitcoins could eventually reach $1 million, my first reaction wasn't excitement. My first reaction was, okay, what exactly is she seeing that makes her say that? Because let's be honest, we've all seen crazy Bitcoin price predictions over the years. We've heard $100,000, $500,000, $1 million, and even higher. Most of the time, those numbers get thrown around without much explanation. But what caught my attention here wasn't really the number itself. It was the reason behind it. Amy Oldenburg, who served as Morgan Stanley head of digital asset strategy, said Bitcoins could eventually reach $1 million, but she was careful to explain that getting there would require something significant. According to her, Bitcoins would likely need either a prolonged periods of institutional adoptions or some type of crisis in traditional finance that causes people to lose confidence in the existing financial system. In other words, she's not saying Bitcoin magically wakes up at $1 million one day. She's saying the path to that level would require a major shift in how investors, institutions, and perhaps even the public think about monies and financial assets. The more I thought about it, the more I realized the story here isn't the price target. The real story is that these conversations are now happening inside one of the largest financial institutions in the world. Morgan Stanley managed roughly over $9 trillion dollars in client assets. That's not a small hedge fund trying to get attention. That's one of the biggest names on the Wall Street. And according to Oldenburg, Morgan Stanley has already moved well beyond the stage of asking whether Bitcoin belongs in the financial system. The discussions now is about how much Bitcoin belongs in a portfolios and how advisors should think about it. In fact, Morgan Stanley Global Investment Committee has already recommended Bitcoin's allocations for a certain investor. Their guidance suggests between 2% and 4% exposure for moderate to aggressive growth portfolio, while more conservative portfolios could hold anywhere from 0% to 2%. Think about how different that conversation is compared to just a few years ago. Back then, many major institutions either ignored Bitcoins completely or dismissed it as speculations. Today, we're talking about allocations percentage and portfolios construction. But here's something else that caught my attention. Even with all this progress, advisors' adoptions remain surprisingly slow. Oldenburg said the issue isn't really a lack of products anymore. The products exist, the ETF exists, investors have access. According to her, the biggest problem is education. Many financial advisors still struggles to separate Bitcoins from the broader digital assets industry. And honestly, that's not hard to understand. When you think about what happens during the FTX collapse, a lot of people watch exchanges fail. Companies collapse and billions of dollars disappear. To many investors, all of it's got grouped together into one bucket. Bitcoins got thrown into the same conversations as everything else. Oldenburg believes that misunderstanding continues to slow adoptions today. She even compares to the current stage of Bitcoins to the early days of BlackBerry. She said she could see the potentials in the technologies back then, but the use case hadn't fully crystallized for most people yet. That's an interesting comparison because she's basically saying Bitcoins may still be in the stage where many people know something is important is there, but they haven't fully figured out how it fits into their lives or portfolios. Another thing that stood out for me is that Morgan Stanley isn't just talking about Bitcoins from the sidelines. They actively building products around it. Early this year, the firm launched its Bitcoin Trust under the ticker MSBT. According to report, it became the first spot Bitcoin ETF issued by a U.S. chartered bank, and the launch wasn't small. Reports indicates the funds attracted more than $33 million on its first day and ranked amongst the strongest ETF launches in the firm's history. What's also interesting is the cost. The fund carries an expense ratios of just 0.14%, making it one of the cheapest Bitcoin ETF available in the US market within a matter of weeks. Assets reportedly grew beyond $200 million. Most of that early demands came from self-directed investors rather than traditional wealth management clients. To me, that says something important. It suggests that investors continue looking for easier and more familiar ways to gain Bitcoin's exposure, especially through products that fits inside traditional brokerage accounts. Looking forward, the conversation becomes even more interesting. Oldenburg was asked whether banks could eventually hold Bitcoin directly on their balance sheet. Her answer wasn't a hard yes, but it wasn't a no either. She said, it's not completely out of the questions if regulatory progress continues. Right now, one of the biggest barriers comes from Basel banking rules, which impose heavy capital requirements on banks that hold Bitcoins as a treasury asset. Those rules make it expensive and difficult for banks to hold Bitcoin directly, but if regulations evolve, that could change. Morgan Stanley is also pursuing an OCC digital trust charter that would allow it to directly custody digital assets. On top of that, the firm plans to offer spot trading through its E-Trade platform this year, 2026. When you step back and look at everything together, you start seeing a much bigger picture. The headlines say Bitcoins could reach $1 million, but I don't think that's the most important takeaway. The most important takeaway is that one of the largest financial institutions in the world is actively building Bitcoin products, discussing custody solutions, recommending portfolio allocations, and openly talking about future adoption. Whether Bitcoin eventually reaches $1 million or not, the fact that these discussions are taking place inside firms managing trillions of dollars telling us how far Bitcoin has already come. A few years ago, the conversation was whether Bitcoins would survive. Today, the conversation is how large a role Bitcoin might eventually play inside a traditional financial system. And that's a very different discussion than the one we were having not that long ago. And my friend, whatever you have right now, don't forget to hold it tight and stack it right. I hope to see you in the next video. Take care.